what's one financial habit you have seen in successful entrepreneurs that the rest of us could adopt?
Oh, I one of my MBA assignments actually was all about entrepreneurs, and there's this perception that entrepreneurs are your kind of, your Steve Jobs type people, and that they're really like their personality is entrepreneurship, and that's why they're successful. That's just it's a myth. There's a whole book about entrepreneurial myth,
Yeah.
great book. I can give you the reference. And actually the best entrepreneurs get good finance people in to help them plan their money, to understand their income expenses, their budgeting, everything else, but also where they've got excess cash, investing it, making the cash work for itself, whether that's bringing in interest or investing it, bringing in dividends that way. So,
So my next question is, from your MBA discussions and your network, what's one finance related question you wish more people would ask?
oh,
What's that one question?
this is going to be a bit of a cheeky answer, actually.
Please.
Yeah. The one question I wish more people would ask, and it is happening more, still a bit of a sticking point, is come and join us.
Yeah.
Quite often, decisions are made without any input from a finance or risk professional, and they're kind of packaged up, sealed and delivered. Here you go, finance director, just sign that off, would you? And I think the value that could have been added had finance representative been in the room would have
Yeah.
been immense, because at that point it's kind of signed, sealed, delivered, and the finance director will go, well, have you thought about that? Actually, there's this ongoing maintenance cost. That's really going to add up. And actually, that means that this supplier that you've discarded could have been the best value for money. Did you think about that? And the management team that have come to the decision will go, we didn't notice that.
Yeah.
But yeah, well, we've made the business case now. So getting finance in earlier, I think, come and join us would be the one question I wish more
Okay.
people would
Would
ask.
ask. Come and join us. Okay, so my last question is, if someone listening feels finance is not my thing and I am that person, what's the one mindset shift you would want them to make today?
Yeah, look, finance is your friend. It doesn't have to be complicated. It can absolutely be simplified. And if you're struggling with it, get somebody who knows it to help. Don't struggle in silence. Don't struggle alone. Particularly for small businesses, your time and resource is really at a premium, isn't it? So focus on what you're good at. If that's not finance, that's totally okay. Get somebody who can work with you well, that is good at finance, who can really help you make those sensible decisions, who can add value, help you assess any financial decisions you're making. And that's okay. That is a good thing to pay for, rather than trying to muddle through it yourself if um, that's going to take you away, take your time from things you can actually add value to.
Wow, that was a wonderful advice. I'm definitely going to take my husband's advice more, from now on. So now we'll move to our audience, questions segment. There are a lot of questions and, which basically I have compiled it all together so that, I can ask you. So my first question is, and it's, actually it is not my first question. It's one of the audience's question. I run a small design studio. How do I know if my cash flow is actually healthy beyond just money in, money out?
Okay, so thinking about the context as well, because
Yeah.
context is always key. I would imagine a design studio, your workload is going to vary. It might be a bit seasonal. Certainly, you will have times perhaps when you don't have an active client, so you don't have that money coming in. So, what I think is really important to do is to try and forecast that. So, if you've got a client that is quite recurrent, maybe it is seasonal, this is where I think I would advise you to get some help, get somebody who's really spreadsheet happy
Yeah.
and plan out the next few years and have a think about when you think your busier periods are, when you think you'll be earning more money. There's periods where you might have, or you think Christmas, for example, over the Christmas holidays, you might have kind of December, January quite quiet.
Yeah.
Just budget for that.
Yeah.
Put it into a cash flow, get someone to help you create a 3-year cash flow, and you'll be able to see where you're not getting the money in. You just need to make sure you hold enough money in your bank account to
Yeah.
pay any of these costs that need to be paid. In my organization, we have a minimum threshold. So we make sure the bank balance doesn't go below that level because that level is 3 months of expenses that we must pay, non-negotiable. So I think it does feel like cash is kind of tied up, but when that rainy day comes, if you make sure you've got enough to pay those absolutely critical expenses
Yeah.
for 1, 2, 3 months, assess it based on your experience. You know your business best,
Yeah.
but generally the rule of thumb is about 3 months. Just hold that in your bank account just in case your clients are slow to pay, you have a bit of a dry
Yeah.
is, get someone to help you do that and redo it as you go. So you've got that kind of 3-year outlook.
Okay, so plan your money out so that you also, survive when your business is not in season, and also, get somebody on board, who can advise you better.
Yeah, I mean, like there are templates online. If you can go into Excel, you can absolutely run a cash flow template. As we've just been talking about, if you're not so confident in finance, your time is better spent doing something more meaningful.
Meaningful, yeah. Yeah.
Somebody can help you do that.
Yeah, makes sense. Yeah. So my next question is not my okay, what's one financial habit you have seen in successful entrepreneurs that the rest of us could adopt?
Oh, I one of my MBA assignments actually was all about entrepreneurs, and there's this perception that entrepreneurs are your kind of, your Steve Jobs type people, and that they're really like their personality is entrepreneurship. And that's why they're successful. That's just it's a myth. There's a whole book about entrepreneurial myth.
Yeah.
Great book. I can give you the reference. And actually, the best entrepreneurs get good finance people in to
Yeah.
help them plan their money, to understand their income expenses, their budgeting, everything else, but also where they've got excess cash, investing it, making the cash work for itself, whether that's bringing in interest or investing it, bringing in dividends that way. So, yeah, it's about doing that hard work, that
Hard
finance,
work.
and therefore making the most of your.
Sounds great. So the third question is, in your experience, what's the easiest way for someone with zero finance background to start understanding their business numbers?
So I think there are many free online courses which are just the basics of finance. Take the time, invest the time in yourself, improving your financial literacy, just to give you that baseline level. Anything complex, as I say, you're better off getting someone in to help you with it. But one of the ones I was looking at, for example, is called Rebel Finance. That's for your personal finances as well as your business finance. There are loads of other ones available if you just have a look online. Even some of the big companies like Google do
Yeah.
these courses.
Yeah.
Have a look at a few, find one that seems to engage you and resonate with you, and invest that time.
Basically, take some time and educate yourself on the subject matters, as there are plethora of material available on Google itself.
Exactly. And be kind to yourself. Like it's hard. So don't be cross with yourself if it doesn't all sink in straight away. Take time. Like embrace your learning experience. I know time is a premium, don't get me wrong, but
Yeah.
this stuff is hard, but it's also really important. And yeah, invest that time. Guide yourself, understand how you learn as well, and make sure you prioritize doing something that will best help you with that
Yeah.
learning.
Sounds perfect. Next question is, how do you tell the difference between healthy risk taking and financial recklessness?
So I feel like this is much more of an expert question than I give, but my 10 pence is it's about understanding your limits and your means. So, for example, you've done your cash flow analysis, you know you've got an extra kind of 10K sitting in the bank. What do I do with that? You can healthily take a risk on that because you know you don't absolutely need that money in the upcoming period to run your business, to pay expenses. So make that money work for you. Any kind of risk taking, there's always disclaimers, particularly with investment schemes, that your money is at risk. So I think you've got to understand there is a risk of losing that money and you need to be okay with that. You're not going to be happy about it. I get that. But if you are thinking of gambling your home on an investment, you know, taking equity out of your home to put into investments. My advice, albeit I am not licensed to give
Mm.
advice, is don't do that. Your home is important.
Yeah.
And particularly if you have a family, they will not be happy if you were to do that, I would imagine. So yeah, it's about understanding your kind of means, your affordability, and yeah, doing your due diligence as well. I feel like as we've been talking about fraud earlier, there's probably quite a lot of investment opportunities that are too good to be true. It might be with companies that have just come on the scene. They don't have that history. They don't have that governance and regulation. Got to do your due diligence and really have a think about whether it's a reputable investment to
Right.
make.
Cool. The next question is there a practical way to spot early signs of fraud in a small business before it becomes a big problem?
Yeah, so building on what we've spoken about, it's about analysing spend patterns, doing that regular financial oversight. So, doing your scanning analysis, having a look at your budget versus expenditure, looking for high pieces of expenditure that perhaps you weren't expecting. One thing I would say in relation to fraud as well is trust is not a control. So, if you're having a conversation with somebody that's spent this big amount of money and they're saying, oh, yeah, it's fine, you know, I spent that on this because of this, really interrogate it.
Yeah.
If you don't understand why
Yeah.
it's a legitimate business expense,
Yeah.
what it contributes to the business, challenge it. And if you disagree with it, you might want to think about, well, actually, this person's really, as much as I've given them a delegated budget, they're really quite haphazard with their spend. Pull it back, rein them in,
Yeah.
do that before it's too late. Yeah, I think analysing, putting in place goals. But also, another thing I just wanted to add was quite often in the fraud world, we look at red flags and just in terms of employee behaviour. So, for example, if you've got an employee who you get to know your colleagues, right? So you kind of understand their lifestyle. I think it's odd if you don't know kind of bit about people. So if suddenly they come in, they drive in a Porsche, they've got a Rolex on their wrist, a Mulberry handbag,
Yeah.
you know, clock that and try and find a
Yeah.
way of trying to understand how they've suddenly come into this
Yeah.
huge amount of money. And there could be reasons for that. I feel like I've said it depends a lot during our conversation. It could well be they've come into some inheritance, could well be they have had a really good lottery ticket, right?
Yeah.
But it's a red flag. It's just something to monitor and observe.
Monitor.
Try and
Yeah.
delve into a little bit other behaviors. So if somebody is really unwilling to share information with you, so you say to them, hey, you spent way more money than I was expecting, why is that? And they say, I can't tell you. Well, that's a red flag in itself. If you have an employee that's really kind of holding everything close to their chest, to the point, they're not taking annual leave, they're not willing to let anybody cover for them, these are all red flags that you should just be mindful of, and might make you want to interrogate the numbers a little bit more because you've seen those red flags.
Okay, so next question is, how do you handle a situation where you discover a major financial mistake or irregularity in your organization?
So again, it depends, and that will vary between a very small organization and a big one. If I start with a big one, there will be processes in place. There will be guidance available to you, I would imagine. I'd be very surprised if there wasn't. As to how to report any irregularities or concerns. Now, at the extreme end of that scale, you could be blowing the whistle, which could be a whole podcast in itself, because whistleblowing is a very intricate topic and we tend to see that as a bit of a last resort. It could well just be bringing it to attention to your finance director or a trusted person of sufficient seniority in the organization. If it's a smaller organization, that's a lot more challenging. I've had that in my career, and I've had to just call up the CEO and say, and this isn't major actually, this was finding small things that I wasn't happy about and having to say, these expenses are being put through. I don't believe these are legitimate business expenses. This is investors' money.
Yeah.
I'm going to reject those expense claims, or, just get that top cover. It may well be, though, that in a small organization, you have those conversations and perhaps it's more pervasive at the top. In which case you have to think about who you can speak to that can actually intervene. Um, and that can be really challenging. If you think it's, say, even a small company with investors' money, there will be avenues you could report to likes of action fraud to look at for you. It's really tricky, and I think it really depends on the situation, but there are lots of avenues. There are people you can speak to. Accountants are always willing to help. And yeah, it depends.
So the next question is of a $1 billion question. When finance and marketing work well together, what does that actually look like day to day?
Great question. In one of my roles, I did manage a marketing team, so I can speak to this with real world experience. So look, finance and marketing are about as chalk and cheese as you can get. Finance and marketing are worlds apart and they work in very different ways. One is very analytical, finance driven, numbers driven. One is actually also very analytical, but much more creative. Yeah, I think in terms of finance and marketing, where I've seen it work really well is
Yeah.
investing in that relationship.
Yeah.
Taking the time to collaborate and understand each other's needs. And as part of that, ultimately, what should always be at the front of your mind is you have a shared objective and
Yeah.
goal.
Yeah.
And that is that your firm ultimately is successful.
Yeah.
And as part of that, the decisions and the marketing that happens leads to generation of income. So, straight away, common objective, common goal. Where I think there are tensions is where, and this comes back to a point where you leave finance to the very last minute and you go to finance and you say, right, I've worked up this marketing strategy. This is the money I need to do it. Please, can I have the money? And finance go, what? No, right? Whereas actually, as you're building that strategy and looking at the return on investment, which, I think as marketing professionals, you obviously
Yeah.
look at well,
Yeah.
bring finance into those conversations right there and then and talk them through it and get their input straight away. If you work up a really good strategy and you say, I do need this money and this is the results it's going to get, you're much more likely to get a yes from finance.
Yes. Yeah.
Because over the time periods you've talked about, whether it's a kind of short term um, stra- strategy or what's the word I'm looking for? Short term initiative. If it's a
Yeah.
long term, slow
Yeah.
burn, going to get customers,
Yeah.
finance, having that understanding, challenging your numbers there and then and going, well, will this really result in 1,000 extra customers and really
Yeah.
having those debates, you're more likely to come to an agreed solution, and hopefully finance will have been able to challenge you a little bit and help you prioritize, and if budget's tight, prioritize what spend you should go with,
Yeah.
getting value for money.
Yeah.
I really do think having finance in at the start of the conversation makes a world of difference.
Okay. So basically, collaborating with them at the early stage of your campaign planning or strategy, make them part of your the process.
Indeed. And what I would say, sorry, is if you get resistance, finance go, why on earth do you want me to come and join your marketing meeting? Explain to them that actually you really value their input and it's important that any marketing investment, and it is an investment,
Yeah.
brings in that return. And so if finance manager, I know you're really busy, but if you can come and just spend an hour with us and talk through, it'll make sure that we're spending in
Yeah.
the right things.
True.
Yeah, sometimes with collaboration, you've got to really get that relationship going, and
Yeah.
same anywhere, isn't it?
That sounds perfect. Sounds great. Now I'm going to ask you the last question, which is if you could wave a magic wand and give every business owner one key finance skill, what would it be?
Gosh, that's really tricky. Can I have three?
Yes, please.
Look, number one is confidence. Don't be scared of finance. Finance is your friend. Have confidence to work with it. Number two is understanding, being able to understand your own financial position. So, how much cash have you got? What money's coming in? What money's going out? And using that to think about what's going to happen down the line and make decisions accordingly. The third thing I would say is being able to make strong financial decisions. So to be able to understand the numbers you're seeing, and that could be anything from, you're deciding on a key supplier of something, being able to go and have a look at their annual report and accounts and understand what it's telling you. Is this a business that's in good financial standing? Is this a business you should absolutely stay away from as one kind of decision? Thinking about where to spend your money and make investments being another decision. So just being able to understand the story behind the numbers.
Behind the numbers. That's a great piece of advice. And thank you so much, Lynsey. Thank you for agreeing to do this. Can people, viewers or, who will be listening to you, where can they contact you if they would want to?
Yeah, sure. Well, I'm on LinkedIn, so feel free to connect with me. I'm always happy to help. So if you have a real quick question and I can signpost you to somewhere, if I can give you a quick answer, albeit I am not licensed to be giving financial advice, it would be very much on a informal basis. And I would advise you to go and speak to somebody who has the professional indemnity insurance in place and the ability to give that. But I can certainly signpost. And yeah, thank you so much for having me.
Completely my pleasure. Thank you so much. Thank you so much, Lynsey. Thank you for coming to the show.
Thank you.